Let's dive into the outlook for the real estate sector this year. Now, of course, the Bank of Canada has been slashing interest rates and has signaled more gradual reductions this year. Our guest says lower rates, just one of the factors important for the real estate sector. We're joined by Christopher Wein, Chief Operating Officer at Equiton Developments. It's great to see you. So you're a private equity firm and you've got a portfolio of about 1.5 billion in various types of properties.
Correct, yeah. Yeah, residential rentals, and then we're also a condo developer.
That's interesting. Was your main thing developing residential rentals?
Correct.
Oh, that's interesting.
Yes.
And that is a sector that has not seen enough building, I presume, over the past few decades.
That's true, and it's really the condo sector that is made up for that fact. And now what's happening is government's incentivizing developers to build purpose-built rental, but we still can't forget the new home buyer. We have to make sure that young people and the next generation can afford to buy homes and build equity.
So they have removed the HST on new rental buildings.
Correct.
But not on new homes.
Correct. Yes. So what I'm calling for is that, similar to what they just did recently with CMHC, they increased the mortgage insurance to 1.5 million. So let's do the same thing. Let's get rid of GST/HST on all new home purchases of primary residences up to 1.5 million. Let's get the housing sector and the next generation able to buy again.
That's a lot of dough. Is it 13% in Ontario?
Correct. Yes.
That's a lot on a home costing $1 million.
Absolutely.
Another thing you say has got to happen, and I think there are movements in this area to reduce the massive charges that municipalities put on new homes.
Correct. Yes. When we look at new homes, especially in markets like the GTA, you can see like a two-bedroom apartment is almost $80,000 of tax. And that's just for development charges and education levies and park levies. So we need to look at that. We need to understand, why are we putting so much taxation against, again, new home purchasers, when it's really that generation that we need to encourage into home ownership. So let's look at a way, at least at the entry level, to provide rebates or to just eliminate some of those development charges in total. As well, the bigger the unit, the more we charge. So we want to build family-style units so that couples can raise families. Well, they pay, two-bedroom apartments cost almost double, or condos, than one bedrooms on the development charges. Why are we paying more charges? Why is someone paying more tax? Because they want to raise a family. It doesn't make sense.
And I sometimes wonder, we build these 500 square foot shoeboxes in the sky. What kind of a housing legacy is that?
Well, and that's part of the challenge. One of the challenges is we've been building more for the investor and more for the speculator. And that's got to change. We as developers have to start building units that truly meet the demands of today's families and future families. But we need the government to help us with that, because we need them to make it affordable from a taxation perspective, both at the municipal level, the provincial level, and the federal level, so that people can actually afford to get into the sector. And then we need Bank of Canada to get the rates down a little lower. They're at the very top of kind of, no influence rates. They got to get to the middle. So we need to see another 75 basis points there, at least. And then we also need the banking industry to find more creative ways to provide mortgages, again, for first-time home buyers.
Why are they're just too risk averse in some cases?
I think so. I think they're too risk averse, and I think they don't understand, in the urban market, the primary sort of cost of living is your housing. So it's, if you live in downtown Toronto and you're raising a family in downtown Toronto, you don't necessarily own a car, you don't necessarily have other debts. You really are putting all of your eggs into that housing market. And that's what you need to do. Because right now we have too many people renting and not enough people buying.
So part of your theme is we need to be building these family homes.
Absolutely.
That will be a legacy, really,
correct,
of housing stock. Yeah.
Well, and the challenge is that real estate, especially housing, traditionally has always been a long-term investment. So people in our generation bought houses and expected them to appreciate over 5, 10, 15 years. What happened when we started to build these micro units is we were looking for 2-year returns and 1-year returns and instant returns. And that's not really what we should be building. We should be building homes that people can buy and live in for the next 5, 10, 15 years and truly build equity that they can then pass on to their children.
Just to turn back to the economics of building rental units. Now, I remember hearing years ago that informally, and this is in past decades, life insurance companies, for example, would buy apartment blocks because they were a perfect asset.
Yes.
They would, reliable, decades they would last. But have they backed away? Has that kind of institutional investor backed away?
It's actually gone the other way. So they did back away for a long period of time because when we had rent control, that really restricted the returns that someone could create building long-term rental. And then when the Ford government removed the rent control, that really started to spur interest again. And then the federal government and provincial government also got rid of HST on purpose-built rental. The municipal government is now incentivizing purpose-built rental developers through DC credits, which is great. So on the rental side, we're starting to see movement, and the biggest institutional investors in the country are investing in purpose-built rental. So the life cos and the pension funds are actually putting a lot of money into new build purpose-built rental. What needs to happen now is we need to get the other side of the equation working, that the first-time home buyer can also get into the market. It's not fair that they should be restricted to rental for the next generation.
I mean, rent control is a complex topic, and I know that research demonstrates it cuts off supply dramatically.
Absolutely.
But as a prospective tenant, I'm going to be worried. Is the landlord going to be gouging me in years to come?
I don't think so. I think, again, what's happened is because most of the rental now is moving into institutional ownership, I think the institutions are looking that they want to keep a tenant for long term, and they're looking to hold those buildings for 25 or 30 years. The fundamentals of real estate, especially residential real estate, is long term. So if you're purpose-built rental, you want to own it for decades. If you're a homeowner, you also want to own for a decade. So let's build units as condo developers that people can actually live in and grow through the next decade. And let's have the city and the feds and the province help us to do that by reducing taxation.
Very quickly, and you have a picture here of something you think could be a vision of the future, a mid-rise boutique building with livable suites. What are we talking about here?
So livable suites are, instead of these 500 and 400 and 350 square foot micro units, let's create suites that a one bedroom should be 600, 700 square feet. A two bedroom could be 900, 1,000 square feet. A three bedroom more than that. We need to create suites where the kitchen you can actually cook in. The bedrooms can actually hold a queen or king size bed.
Right.
And then the beauty of mid-rise is we can build those buildings in 2 to 2.5 years, whereas the super high rise can take 5, 6, 7 years.
That's interesting. Some of these micro units, you can't even get a queen size bed into them?
No, in many cases, it's a single bed.
A single bed?
Single or a twin.
Goodness, I don't like the sound of that. Yeah, anyway,